Thank you very much for coming on the program, Dr. Kiuna. What would you attribute this very good performance to?
The growth is really attributed to a very strong growth in demand that we've been seeing. You have to remember there's a lot of interest now in the East African region, particularly across the oil and gas space, where there's been a lot of new developments in northern Kenya and in the Lake Albert region, where we continue to be quite active on the engineering side.
So the infrastructure and engineering division is doing quite well. These operate in 12 countries. So where does that place the traditional market of Kenya, where you're based?
Yeah, look, actually, we have really, Kenya is still our largest market, and there we are really the market leader both on the engineering side, but also our traditional businesses on the cables, transformers, and switchgear, which have been going into the infrastructure electrification programs. In terms of focus, we're really focused across the infrastructure space, but more specifically power generation, mining, and oil and gas are really the three key sectors that have been helping to drive growth.
You also have a stake in Rift Valley Railways, maybe a more troubled one. This concession now has a $287 million program to rehabilitate it. Do you still feel strongly about the prospects for Rift Valley Railways?
Oh, absolutely. We continue to be, very bullish on Rift Valley Railways. I think it is one of our most exciting prospects and companies. Today, it doesn't contribute to TransCentury's earnings, but in the medium to long term, it should be a very significant contributor. If you actually look at the strong growth in demand for freight transportation in the region, that's already growing very rapidly, but it's going to continue to grow even more rapidly. The ability to move that on the road is actually coming to its physical limit. So, I think it's a very important investment, not just from our perspective when we look at the potential returns from it, but also from looking at it in terms of the cost of doing business in the region. So it's really very strategic. The key issue with Rift Valley Railways has really been capacity. The market is there, the demand is there, but the ability to capture it has been an issue, and that's why the capital investment program to be able to match, ability to supply the market with the current demand is so important.
Your mining and power clients are doing very well right now, and also there's been significant discoveries of oil and gas across Eastern Africa. What are your thoughts in terms of the prospects for that segment of your business?
Yeah, we're really involved on the services side. As we continue to see strong commodity prices on the natural resource sector, and we continue to see increasing activity on the exploration and then further on in terms of actually the beneficiation of all of these opportunities, and that creates opportunities for players like TransCentury because, at the end of the day, to execute those projects, it's very important to have local players on the ground who can actually help you and partner with you to make it happen.
Across the grid, where do you see to be the likely biggest growth drivers going forward?
Yeah, as I said, look, the biggest drivers that we're seeing in the region are threefold. Power generation, oil and gas, really in Eastern Africa, the two big ones. But beyond that, we're also heavily involved in Zambia and DRC, where we're seeing a lot of activity on mining and more specifically on copper and gold mining clients.
The company began 10 years ago, almost like an investment club. You've come out to be almost an investment powerhouse in terms of in infrastructure especially. Are you confident about the strategy remaining to be in that area, or are there any particular new spheres you might be looking at?
No, I think, we always say the strategy is quite simple. We try to keep that not too complicated. I think the opportunity on the infrastructure space is obvious. I don't think it's a very compelling story, but the real issue has been actually able to execute against it. So we're trying to keep it simple. We know the opportunity is there. We know the market is there. We know that if we can execute, then it'll be a good story. So really just trying to keep our heads down and make sure that we deliver against the opportunity.
Dr. Kiuna, this is a tough act to follow. A 241% jump in pre-tax profit what are your projections for the next full year?
I don't want to commit to that right now, but I think we'll continue on a very strong growth trajectory. I think that's been clear from the beginning of the year. To really answer your question, it really all depends on how quickly we start to see earnings come in from the railways, because that's going to be the next very significant step change in terms of TransCentury's earnings.
I'm going fishing now. Civicon, which is one of the companies you invested in last year, has turned out quite well. Any other companies across the region, across the continent, you have your eyes on?
Well, we've really been looking to strengthen our position on the electrical side, where we're the largest player in terms of producing electrical cables, transformers, and switchgear. We have now scaled up our operations in DRC quite significantly. Again, that historically hasn't been a contributor to earnings, but we believe will be a good opportunity given that we're the only player in that market. And of course, as I mentioned, we've gone into the Copperbelt region of Zambia, where we've been looking at serving some of our traditional mining clients in terms of their electrification needs.